Hey, welcome to Blue Cloud Trading. My name is George. On this channel, we dive into the latest market insights to help you make sense of the financial world. Today, we're breaking down two opposing views from CNBC's halftime report. On one side, we've got Josh Brown, the CEO of Ritholtz Wealth Management, who's feeling bullish and sees opportunity in the markets. On the other side, Steve Weiss of Short Hills Capital is sounding the alarm with a bearish outlook, warning of tougher times ahead. Let's check out these clips to hear their takes, then I'll share my thoughts on what it all means for your investments.
But what's clear today is that this market seems very content with any kind of deal in hopes that it leads to more and bigger.
I think that's right, Scott. Against all odds, the U.S. managed to make a trade deal with its greatest ally over the last 200 years. It's really remarkable. When you think about where we were a month ago and the sentiment around the Chinese situation escalating, around all of these different country-by-country bilateral disagreements that were being aired out in public, all the market really needed to kind of like regain a little bit of trust that things are going to work out well was good headlines. And that's all we're getting right now is positive headlines. We're not getting any more of the saber rattling. We're not getting any more of the ratcheting up and new demands being thrown out. And it's good enough. And the reason why it's good enough is really important, because I don't think we'll be able to say this in 2 weeks. The reason why it's good enough is if you take the blend of actual earnings and expected earnings of the companies that still haven't reported, and we've got most of them by now, you're talking about a 12% year-over-year earnings growth rate, which, considering all of the negativity, is pretty fabulous when you also consider that the multiple has come down as these companies have beaten and exceeded expectations. It's been like the right elixir that we needed to pull ourselves out of that funk. Now, again, in 2 weeks, I don't know what the upside catalyst will be unless we get more deals, get something with Japan, get some talks going with China. Maybe that'll be good enough. But you're not going to have that backdrop of companies coming out with earnings and the rest of us being like, oh, okay, I guess things are still pretty okay. But that's what we've been able to do in the last 2 weeks. And you see the results. It's been more than enough.
I mean, Weiss, the catalyst that Josh is talking about and many are still looking for could very well find itself, at least according to the president, who, in the context of the remarks that he made in the Oval and the news conference that followed, not an official news conference, obviously, but the Q&A with the pool that was gathered in the Oval, the president made the following statement, thinking about the bigger picture of a bill that he hopes to get done in the House. We're talking tax cut extensions, obviously deregulation, and he says of those things, quote, and if that happens, on top of all of these trade deals that we're doing, this country will hit a point that you better go out and buy stock. That's directly from the president today in the Oval. For somebody who has been...
Did he mention any specific tickers?
He did not. Not yet.
Okay.
For somebody who's been fully hedged at times recently, who's certainly had a negative, if not more cautious bias than most, I think it's fair to say, on this desk. This market's up a bunch, man. I mean, if you look at where we are, and this is before today, the S&P up 16.5% from the lows, and now we're at the highs of the day.
Yeah.
What say you now?
Well, I'll say what I said last week, which is that the short-term market's going up, the intermediate term, the market's going down because we are going to recession. I sent Kevin a text last week, maybe you were on that as well, that said I'm stupidly long, which means I was 120% net long the market. A lot of that was through indices, but I've added. And the reason why a lot of it's through indices is that I'm not married to the market continuing. Look, we got all the negative stuff out of the way, right? So the news couldn't have been worse. I got that right. I did not catch the first day of what is probably a 12-day move at this point, but I caught quite a bit of it. And don't forget the beta I have in my portfolio. So I've actually done quite well over this period. But my view is still that I can't find stocks that will withstand a recession, and I do believe we're going into a recession. Look,
Why are you so convinced that we're going into a recession?
Because unlike reacting to news and reacting to momentum in the market, I'm actually talking to CEOs. I'm talking to heads of private equity firms. I'm talking to the companies that I'm involved in privately investing in, and I sit in the board. Things are frozen. CEOs are not investing in their business. Private equity firms tell me the last big or even decent-sized private equity deal that was announced. They will get it. They will get it sooner.
Sure, but
they will get it later.
It doesn't necessarily mean that we're going into a recession. I think everybody knows a story well told at this point. That exactly what you've said.
Yeah.
We get it. We've heard it on earnings calls. We heard it out at Milken about hiring and capital deployment. We get it. But this is also happening, mind you, at a point where the economy is pretty darn resilient. That the labor market has held up, I think, better to this point than people have thought. That the economy has held up to this point better than I think people thought. The soft data hasn't necessarily become the hard data. The earnings have held up, I think, better than most people thought to this point.
Let's talk about that. Let's go through it one by one. In terms of the economy holding up, there's a massive rush to stock your personal shelves, to stock store shelves before the tariffs hit. So you're buying in advance, you're stocking in advance. I can tell you supply chain is not frozen like it was in COVID, but I can tell you that the supply chain is very, very slow. So companies that have switched, again, like private companies involved in switch their supply chain from China to India, they won't get delivery for 4 to 6 months on critical items. So you have to distinguish that, number one. Number two, when you talk about earnings, have you ever, has anybody here ever seen an earnings period like this, even during COVID, where guidance was pulled because the CEOs don't know what the future is?
No, but
nobody has a problem with that.
I think we've got, of course they do. But I think you will admit, I hope, that we've gotten more guidance than maybe we thought we'd get, despite the fact that they were pulled. No, we expected to get no guidance.
That may have been your expectation.
True. No, I think
not mine.
Weiss, you're going to argue with me no matter what I say, so I'm just going to say
I'm going to correct you when I think it's different.
We're not going to do this again. I think most people assumed that earnings were going to be, the guidance was going to be terrible, if any at all, and that earnings wouldn't have come in the rate they have.
Don't disagree on the quarter. We saw earnings.
So what's the problem? Where's our disagreement?
Scott, you give me a chance to
Where's our disagreement, Weiss?
The disagreement, there is no disagreement on the quarter. The disagreement is moving forward. Again, let me repeat. I'm long the market because the short-term momentum is going to continue because the market is paying attention to the momentum. Look, the president comes out and says buy stocks. Every president says that. What's the analysis behind it? Of course he wants you to buy stocks. Of course he wants the market.
No, the last time he said,
the
last time he said buy stocks, the market went up like a rocket ship.
Right. So all of us should go home, retire, and just listen to what he says.
We didn't have a recession. We didn't have a recession in 2022 because people didn't lose their jobs. And so far, we don't have that yet either.
Okay.
We might.
Right.
We might, but it's not there.
Right. People aren't going to lose their jobs. The cost of replacing labor is too great a burden on companies, and they still have that issue coming out of COVID, right, where wages went sky high, particularly in the healthcare field. In terms of a recession, if the economy, if companies stop spending, stop investing, if foreign capital stops coming in, if we cut entitlements and cut government spending, you will go into recession. So party now, I'm partying with you, but next quarter, the market may be a different story.
I'm not the one throwing the party. I'm looking at a market that has been up a ton from the low, and
no argument, I'm there,
and is pretty content with where the situation looks to be today until the market or the economy or something shows it otherwise.
I'm going to go commiserate with Ken Griffin. I'm going to go commiserate with Paul Tudor Jones, with all the others who see what I see.
Okay.
So they're all idiots. We're all wrong.
Who said that they're idiots?
Well, apparently you're discounting what they're saying. So you don't buy into it. You think it's going to keep going and going and going. I'm going with them.
I didn't say that it's going to keep. I didn't say that it's going to keep going and going and going. The only point I was making
we have no
that it's gone, I think, a little bit better than many had feared that it would.
Undoubtedly, it's the story of momentum.
That was definitely a very interesting little exchange there between Scott and Steve Weiss. Obviously, Steve is very hesitant about this market. He does recognize the strength in the stock market right now. I recognize it. I think it's, we'll see if it's temporary or not. It's all really going to end up being dependent on the tariff situation, and we won't know what that looks like for a couple of months. In the meantime, can you be trading these markets? Certainly, with the understanding that it's more short-term trading, right? Because the longer-term charts, as I'm going to show you guys in a few seconds here, all right, are not looking particularly great. Okay, so let's take a look real quick. What we are essentially going to do here is we're going to take a look at the markets using the Ichimoku indicator, a Japanese indicator. Now, I've been trading for over 25 years. I've tried pretty much every indicator out there. This is the one, folks, I feel like has the most potential for helping you to be profitable in these markets. And as you can see, one of the rules of Ichimoku is that you want price to be above the Ichimoku cloud itself. When it's under, we are still technically in a decline. This is the Dow Jones right here. So yes, we've had a little bit of an uptick here. This is not necessarily going to turn into something extremely bullish unless we break through and we take out these prior highs. That's going to be really important. So we're still in a downtrend in the longer term type trend. If you are trading this on a shorter time frame, like the 2 hour, it's a different story. We can switch it over here. And you can see on a 2 hour time frame, yes, we are above the Ichimoku cloud. Everything is looking pretty bullish. It all started getting bullish back here on April 23rd, as you can see, when price got above the Ichimoku cloud. And I mean, it hasn't really moved up that much. I mean, it's moved up 4.33%. Okay. When we look at the overall picture here in the weekly chart, we've had a few weeks here, 3 weeks, and basically where it's been moving up, but we're still stalling inside the cloud, as you can see right here. So we haven't broken through anything. We've got a faster moving average here that's under the shorter time frame. We've got the Chiku span, which is part of the Ichimoku indicator. It's one of the elements here, that white line. That's essentially today's closing price. In this case, we're looking at a weekly chart. So if you go back 26 weeks, we'll find that white line right there. And what that represents, basically, if it's underneath the candle 26 periods ago, that's bearish. All right. In the past, as you can see, when we were above the candles, the white line we had a very bullish situation going on. Right now, we've experienced a lower low here on the weekly chart. We've got a double top on the weekly chart. Yes, we've moved up a little bit, but is this it? Is this where everything turns around? Do we have any news event other than the news event that we just heard about a few seconds ago, right? We heard about the UK trade deal. All right. So yes, there's one country that they've worked out some kind of deal, but we're talking about, the majority of the stuff that comes into this country comes from China. So if they can't work something out with China, I think we're going to be experiencing some very interesting problems in the near future. Now, Dow Jones today. All right. This is after the close. Actually, it's not after the close. It's 3:46 p.m. Thursday, May 8th, as I'm recording this video. The Dow right now is up 1.03. NASDAQ is up 1.49. It's kind of declining since 1 o'clock. You can see it's starting to pull back a little bit here. And the Russell 2000 is up 2.25. It's actually holding up a little bit better than the S&P, the NASDAQ, and the Dow Jones. Here's the heat map, guys. It is looking really bullish today, right? The market so far, except for the healthcare stocks. They were hit a little bit. Utility stocks as well. Berkshire's down 0.85. But the big names like Google, Amazon, Tesla, Apple, Microsoft, and NVIDIA, a lot of the semiconductors did well today. And here is the sector performance. You can see here the one-day performance. Communication services was down the most. Then after that was basic materials. And then the ones that were up the most were technology, healthcare, and consumer cyclical. And there's the 1 week performance and 1 month performance. So for the month, we were doing pretty good so far. The technology is actually up 17.63% for the month. So yes, there's been an uptick for sure. Let's take a look at FEZ. Now, FEZ is the Eurostoxx 50 ETF. This one is stalling at 57.67, that prior high right there. And so We'll see what happens here with the Euro stocks, but we need to break through that barrier first, in my opinion, before it makes sense to be taking a long position. Here's the Russell 2000. You know, yes, we're still in a decline here. We are in a downtrend. We've got a lower high right here. Okay, we haven't broken in this trend line even. So, I mean, what's there to talk about here? That's the weekly chart. Here's the daily. Now on the daily chart, let's take a look at that. Let's draw a trend line and see where we're at with that. Did we break any trend lines yet? We have not. So you can see that longer term time frame that goes all the way back from December has not been broken. Now you could argue, okay, yeah, but what about this trend line right here from that high and that high right there, right? From there and there. Yes, we broke that through that. But here we are at the Ichimoku cloud. That's going to be a level of resistance. What else? The 200-day moving average. It's hovering right above. We are under the 200-day. Josh Brown has said it before. You know what? Nothing is good under the 200-day, right? Nothing is bullish under the 200-day typically. But yeah, we're seeing some strength, temporary strength. If we can break through these barriers here, you know what? I'm going to change my tune. If we get some new information, all right. But we're going to use reason. We're going to use logic, and we're going to basically observe what is occurring in the markets. We're going to look at the charts, and the charts, folks, guess what? They can't be manipulated, okay? Unlike stocks and their earnings, like remember Enron, for example, when they misrepresented the fundamentals and the earnings reports in Enron, an older company, you know, and you know, just even news in general can't be manipulated. When it comes to the chart itself, it's the final say, right? And here we can see the price changing. And yes, the Russell 2000 is moving up. It's up 2.10, but still under that cloud. Here's the QQQ ETF. We today burst and broke inside the cloud. That's very bullish. But what's going on now? Now it's stalling at the 200. Okay, it stalled there not that long ago, back on, what was that, May 2nd, Friday, May 2nd, last week. And it's stalling at it again. It's Thursday right now. Can it break through this level? Then we might see some interesting things happening. Here's the S&P 500. All right. This is April 2nd. See this? Remember that little candle right there? We haven't taken out that high yet. That's the day that we got that announcement about the tariffs that were going to be taking place, and we saw that big decline. Since then, it's recovered a little bit, but we haven't taken out that high. So keep that in mind. All right. That's really important. If you can't take out the highs from the day where things started to drop, you've got some issues. And we're under the cloud right now. We're developing a little bit of a spinning top, as you can see here on the daily time frame. All right. But if we look again, you look at a shorter time frame, it's going to look more positive, like the 2 hour. So we can see higher highs, higher lows on the 2 hour time frame. And you can trade that. But remember, you got to stay on top of that and watch it like a hawk. And then you got TLT, 20-year treasuries dropping down 0.86%. The VIX dropped a little bit more, down 5.56%, but look where it stalled, right at the cloud itself, and it did not break under. That could be a really bullish sign. If price can get under the cloud and under the 200, the VIX, we want to see that dropping further. That represents the volatility and fear in the markets. That could be really bullish for the markets. But right now, what do we have? Well, take a look. I mean, we got a higher high here from this high, and we haven't taken out this prior low here. So that's where we're at with the VIX. Fab 7 stocks. Let's look at those real quick. Microsoft still moving up. Remember yesterday I talked about this little base that was developing right there, and we broke and we're moving up still. Now this is a reversal candle. It didn't really break out on high volume, but it's moving up steadily, up 1.37%. I like Microsoft. I've got it highlighted here with a little blue flag. It's the only stock out of the Fab 7 that is looking relatively bullish. You can see it's above the Ichimoku cloud. We do have a bearish cloud here on the weekly still, but price is above it. And the Chiku span, remember we talked about that white line, that's above price. That's also bullish. So when you don't have all of the elements of the Ichimoku telling you that it's bullish, then we can't really call it a strong uptrend, right? We can't. In fact, we've got a lower low here. You can see that this low here is lower than the prior low, and we haven't taken out these highs yet on the weekly chart. On the daily we have, and here's a 2 hour time frame. You can see how Microsoft has been performing after the earnings announcement, right? So the next earnings are on July 29th. All right, so we broke through that downward channel, gapped up. It was looking good. Here's NVIDIA on the 2 hour time frame, also looking pretty bullish, right? Breaking above the 200-day, but on the daily time frame, we're still inside the cloud. Google, under the cloud still. It was up 1.95%. Here's a 2-hour for you, right under the cloud still. I wouldn't be jumping into that. Here's Tesla. On the 2-hour time frame, it's above the moving averages, above the cloud. On the daily chart, we're inside the cloud and under the 200. So there's nothing to do here. Amazon, same thing, under the cloud and under the 200. Apple, under the moving averages here, under the cloud. No thanks on that one either. And Meta is under the cloud, but I bet you it looks good on the 2-hour. Let's look at that. Yeah, so on the 2-hour time frame, it's been moving up. Remember, the 2 hours can be very short-term type situation. What Steve Weiss said was accurate. This is a short-term move up. He confirmed that. I confirmed that. The question is it a sustainable move? I don't know. I don't think so until we've got more clarification. And that is going to be ultimately what determines where the markets go, folks. Now, I've got over here the sectors, right? These are the top sectors that have been performing really well, like GDX, for example, which is gold miners ETF. If we look at this on the weekly chart, we've got price above the moving averages in the cloud and on the daily chart as well. On the 2-hour, we've had a little bit of a pullback here. As the markets go up, GDX doesn't perform as well. But overall, the longer-term trend is still intact. Same thing with Bitcoin. Look at Bitcoin here on the daily chart. Bullish cloud formed. Okay, on the weekly chart, same situation. So Bitcoin is doing pretty good. It's up at $101,252, which is crazy. XLP. I'm glad that I have a small position in Bitcoin. I don't have a huge position, but I have a small position. Diversification is important. XLP, consumer staples. I am above the cloud here. As you can see, XLP is above the cloud. I'm above the cloud. XLP is above the cloud. I'm also above the cloud, by the way, just in case you didn't know that. And here's the daily chart. All right, also above the Ichimoku cloud. It's very bullish. It's above the 200-day moving average. I like consumer staples. That's one area that's defensive that I think will do well, even if tariffs, stay in play. So IBIT, Bitcoin ETF. This is another way to invest in Bitcoin. You can see it's still moving because the price of the market hasn't closed. It's 3:55 p.m. right now. There's a seconds moving by, so it looks good. I like the IBIT ETF. Here's the weekly, and here's a 2-hour for you. So all time frames are giving us some nice confirmations for IBIT. Utilities looks pretty good. It was dropped a little today, though, down 0.89, but it's still holding up above the cloud moving averages on the daily. Here it is in the weekly. Not all of the elements are looking perfect here for the weekly. As you can see, the Tenkan-sen, the faster moving average, which is the 9-period average, is under the slower one, the red line, the 26-period, that one right there. So when you've got the faster moving, which crossed right there, that's a bearish scenario right there. We don't want that. But with that said, it takes a while, right? It takes a little bit of some time for the weekly chart to actually change out, so it's going to take a little while for that to happen. I like the fact that the Tenkan-sen is moving up. So you can see that right there. Someone asked about how important is the cloud itself, like as far as the thickness of the cloud is, if it's like thin. Well, the thicker it is, and if it's moving, upwards like it was over here. This is, let me show you what I'm talking about. See how the cloud right here is moving up, and it's relatively thick. It will hold up much easier. When the cloud becomes flat and smaller like it did right here, it's once it breaks, it's more than likely to continue, and that's exactly what occurred right there. So you've got more support on the cloud. Think of it as a bigger bounce off the cloud if it's a wider cloud. Okay, that's really important. Now GLD on the weekly chart, we're getting a couple of reversal candles here. This candle has not completely formed yet. It's Thursday, so Friday we'll know what this looks like, but it's down 1.93%. Here's a daily chart getting under the Tenkan-sen right now, and here's a 2-hour. So it's inside the cloud. That's GLD. I'll just show you guys what these look like. XLB let's look at the daily chart under the cloud. USO under. XLC is under. That's communication services. Here's the semiconductor ETF still under. XHB under. Okay. Real estate is under. US dollar is under. See, so that's what I'm saying. It's like, yeah, you're going to find some select stocks that are doing well. Technology stocks might be doing, some technology stocks might be doing well, but when you look at the overall picture, it's not that bullish honestly. Okay, I'm sorry to tell you guys. XLV, healthcare, still in a decline. XLK, showing some strength, right? That's technology, but it's still under the 200. Industrials, okay, now we're talking, right? So price broke through the Ichimoku. Remember what I said earlier about the thickness of the cloud? Right there, you can see that it was a relatively thin cloud. It broke through. This is higher probability of moving up. I also like what I'm seeing here down below with the directional movement index. The green line is above the red line. That's important. And the ADX, which is the white line there, is moving up. I've got this at a setting of 9. Okay, it does not come at a setting of 9. You do have to change it. It's a little faster. It gives me a better, I believe, a better idea of where we're at. Like, for example, let me show you what I'm talking about. Like when the red line crosses above the green line, like it did right here in the past, if we go straight up, we were above the cloud right there temporarily under the moving averages, but look what happened. As the red line stayed above the green line, price declined, right? So same thing over here where price, the negative DI crossed up again. It happened right there. Look at that big decline. Boom. Now that we're slightly more bullish here with industrials on the daily, and here's the weekly chart above. Okay, so I think I'm going to go ahead and add that. I'm going to highlight this one today so that we have one more to look at in the strongest of the sectors. Financials. Here we are on the weekly. Tenkan-sen is under Kijun-sen still, but it's above the cloud, and on the daily chart, it's struggling to get above the cloud. If it can get above, then maybe I'll consider adding that one as well. Here's energy under the cloud. Okay, no go there. XHB, home builders, same thing. And copper, still under the cloud. And folks, guess what? That's going to do it for this video. If you want to stick around to find out about becoming a member and what the benefits are, just stick around. Here we are. This is the channel, Blue Cloud Trading. What do we got here? We've got member-only videos that are not available on YouTube for those who are not members. How can you become a member? Right next to the subscribe button. And by the way, it is free to click the subscribe button and the notification bell. All right, then you'll find my channel in your subscriptions. 100% free to do that. If you want extra paid content, all right, consider joining, hitting that join button. This is how you do it. You just click there. Boom. You've got Blue Cloud Supporter, Blue Cloud Trader, and Blue Cloud Legend. You'd be supporting the channel so I can continue bringing these videos to you guys by becoming a Blue Cloud Supporter. As a Blue Cloud Trader, you'll have access to those exclusive member-only videos that I do each weekend where I go over my entire portfolio. Under Blue Cloud Legend, you'll get day trading videos that I've recorded, as well as those exclusive member-only videos and daily trade updates. So you can get those. You'll find them under posts, or it might pop up as under membership. So that's where you'd find the posts. Really easy to become a member. Hit the join button here. Hit the join button here. And if you like the software that I've been using, this TC2000, I strongly recommend this. If you've got positions in your 401k, you want to keep track of your stocks, your ETFs, and everything else. Imagine just being able to type it in. Apple. Okay, I've got Apple stock. Boom. You can pop it up. You can change. You can get rid of all those lines. You can see. You can set it up any way you want. We've got tons of indicators in here. Look at this. You got Bollinger Bands, everything you can think of, and there's the Ichimoku. So you can get a $25 discount. Okay, by clicking here, 8 more links. So from my page, click here, scroll down, right here, third one down, that link, tc2000.com/download/Blue Cloud Trading. Click on that. There it is, pops up. You enter your email here, you download the software, okay? And like I said, you'll receive a $25 coupon towards your service, courtesy of Blue Cloud Trading. And as long as you haven't used the service in the last 12 months. That's the only kicker. And then here's the pricing. Click on pricing, software plans. You can switch. If you want biannual, you pay a lot less per month, like $22.49 versus $29.99. All right, so you can switch it and pay upfront for like 2 years, or you can do it for the 12 months, and you can see the prices there. And here's the monthly charges. I would recommend gold. Out of the two, if you're start off with this one so that you can actually draw on the charts. You'll want to have that option. You'll want to create alerts for your stocks. Do that. I recommend it. And that's all I got for you in this video, guys. Thanks for watching. Thanks for supporting the channel. We are back on YouTube, and I will catch you all in the next video.